All right, let's go ahead and get started. Good night. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 10th, 2022. Go ahead and get started with the daily health check. So this weekend, what we talked about was the market being in a critical state at the end of this run. And we framed, that was Thursday, and then Friday voted to the downside. And so we built this trade frame around the close from Friday. We said we were going to be ready for a large directional move today. And that's what we got in both directions. It started off with a gap down. And then the first tradable moment, of course, was then this strong directional move, 1.5 ATRs in a straight line down, made a new 10-day low, then reversed and made a 2 ATR move to the upside to close within a fraction of Friday's close and within a fraction of the reversion to the Bollinger Band mean. So this was a 1.5 sigma move that moved right back to the Bollinger Band mean. That is the least surprising move of all. Once this thing reverses, this is a move that we should have caught in both directions if we're following price. If you're following the direction that price is going, then you can't not take those trades. Where does that leave us? Well, the net for the day was a micro loss in the S&P from close to close. The slope of the 3-period whole moving average is still down, but it actually improved somewhat today in spite of that sharp downward move. That's kind of interesting. We're within a fraction of the Bollinger Band mean. We're close to the 2.5% sell-off from the high. The dragon is waiting for us in that resistance zone. The Z1 at 474, fair value is at 476, and then the 10-day high, the 30-day high, and all-time high up here at 480. What could we see tomorrow if we just take today's close and bracket that with about a 50-cent, no, it's about $1 risk box altogether. In other words, 50 cents in either direction. Tomorrow, that's set up for, a potential move of this magnitude down. Yeah, it could come back and test that low tomorrow if it comes out of that zone. It could also test that high. I mean, the same size move to the upside looks like this. That could get us all the way to the top of the dragon just by replicating the move of today. So that's why I would treat this as a critical state, ready to go hard in either direction. The least likely move tomorrow would be for it to have a sideways quiet channel. That is the least probable move. That would be the most surprising move, is if it did not move sharp again tomorrow. The PSAR has flipped, so we are mindful of the downward possibilities. You've got the RL30 extension also pointing down, and the dragon acting as a lid on this upward movement. So any moves tomorrow that start up and then start to roll over, you have to respect that as a way to get short. But then moves up tomorrow that come out of that yellow zone across the Bollinger Band mean at 467, you have to respect that as an upward move. There is there is no reason to have a directional bias on this market. What you have to respect is the size of the volatile move in either direction, and that is considerable. So we got to be ready to go in either direction with that tomorrow. Taking a look at the sectors, the S&P was basically flat for the day, finishing up a minus 0.12. Emerging markets were truly flat at 0. Tech, micro improvement at 0.07, and the Treasury's up a quarter. The Russell was down a third at minus 0.35, and Diamond's down minus 0.4. Let's take a look at the downside trades first. Starting with the sectors. Simon Property Group, energy and finance. So maybe this is the first day in a week that energy and finance underperformed the S&P. Now, it wasn't by much, but they've been outperforming all the way. So this might be that turning point where, which we talked about yesterday, was the idea that tech may be positioning for to regain the sector strength, the sector leadership. And we saw the first hint of that today with energy and finance down and tech up. Bitcoin ended up minus 0.38. And blended commodities minus 0.4. Consumer discretionary, oil exploration, Mexico staples down minus 0.8. Agriculture minus 0.81, lumber 0.8, oil 0.9, materials minus 1. So that's another indication that maybe this is the reversion back to tech in leadership, as all three of the cycling sectors, XL, B, E, and F, were all underperforming today. Brazil down minus 1, moonshots 1.2, the other lumber 1.23, then blockchain lithium minus 1.4 and 1.6. The Bitcoin Trust 1.8, VIX 1.8, Ethereum minus 2. The rebound at one point that was down 10%, so the 8% rebound was actually tradable today too. Ethereum 2.3, clean energy 2.3, Bitcoin minus 3, or I'm sorry, the large cap blended crypto minus 3%. Now individual targets. Now listen to all of the steels and the metals. So there's TX minus 3.8, Cliff, US Steel, and Alcoa all in the big loser category today. Again, great intraday traders. Got to be judicious on the swing trades with them. Virgin Galactic 3.8, Coinbase 3.1, PayPal 2.5, Robinhood 1.7. And then Coinbase minus 3. So all the financial disruptors got smoked today too, with the weakness in the cryptos. All right, let's take a look at the upside. Where was the strength today? And these are the ones that were leading the way north after that intraday low. So marijuana minus 0.8, tech up 0.02, ARC Genomics 0.02, the FANGs and S&P Bio 0.15, I should say. ARC Innovation 0.26, Wheat and precious metals, 2%. And then just a few targets that were deeply in the green today. Tesla up 3%, closing well above 1,000 now, and above 1050. Squarespace 2%, John Deere 0.3, Microsoft basically flat, Apple basically flat. So these were the ones that recovered the morning losses the most, and this tends to be looking like technology leadership. And the FANGs did well. That's your uber large cap modern tech giants. That's your Googles, Facebooks, Alphabet, Netflix. So tomorrow, cautiously optimistic on technology to be the leader again. If this is truly where the transition from materials, energy, and finance over to tech is happening, that's what this would look like. Here is my XLK trades today. I was working on the 10 minutes because I had some work to do in the classroom. There's the big gap. That acts like a giant red candle. All right. So what that means is from the Z3 breakout, and the gap down, this is like one giant red candle. So when I had the confirmation of a new intraday low, I get low, I get short there, and then I'm just going to like a 2-bar high just across the VWAP. That works out to about 50 cents of a risk box. This thing keeps making new lows. I noticed here that it failed to fail further. And I took this one as like a 1, 2, 1, 2, 3 exit. When it crossed the VWAP, got long. I was slow to exit on a 1, 2, 3. So that was basically a scratch. And then I tried, as soon as it reversed, tried long again, fractional loss. I paused to reset. Then I'm noticing the entire market was putting in a base here. And now what we have is a COTA 2. We have a low, a higher low. Now it's in the spring. It crosses the dragon. I'm long with the stop just below the VWAP. That's about a 50 cent risk box. That's my minimum manageable risk box in XLK. It moves in my direction, crosses the Bollinger Band mean. I buy a second position, and now I'm just managing, and now I'm using the upper skin of the dragon on this one and just take like a managerial exit. That works out to be about a 1, 2, 3 exit here. In the last little bit of the day, I decided what the heck, give it a try, and grabbed a piece. Again, I'm using a standard risk box of 50 cents all the way through. You've got to follow the price and do what it tells you. All right, let's take a look at the reports and we'll get to the charts of the day. All right, let's go to dashboard number one. Bullish normal. The slight recovery in the afternoon brings it back a little bit stronger. The percent stretch is now red bullish. So that's a warning of critical state on the larger time frame is developing. The RISC is still cautiously optimistic on the swing trade upside, but the fact that it's rolling over makes me a short-term trader for sure. I'm ready to go in either direction, but short-term trader for sure. The overreaction signals are still firing for the US indexes, as is the European 350. So the upside move is still a strong, has a strong swing flavor to it. It's still a reasonable upside trade. Note, a couple energy companies are in min pain status there with Chevron and Exxon Mobil. Only one doji today. I'm surprised there was even one, to be honest. That's Nike, which is at 7-1. And then on the RSI 2, Nike's interesting because it finished with a 1 on the RSI 2 and was a big percent loser today. That is a symbol that did not have the favorable rebound of the rest of the market. There's a ton still of auto framers available. I like Microsoft at 4-1. Intel's interesting today, up 6.33%. It has interestingly no other swing patterns, but that move is so strong. We talked about that this weekend about conventional tech having opportunities. I like Apple at 3-1. A ton of auto framers available in the ETFs. Clean energy continues to get smashed. We talked about why that could be the case this weekend. Europe lagged. You have lots of 551W. So that means that they're up for the 5 weeks. So the 551W is a relaxed form of the triple screen. They're up compared to where they were 5 weeks ago, down compared to where they were 5 days ago. And today was a white candle, meaning that it closed higher than it opened. So we would consider that to be like a day one resumption of the primary upward trend. And so we're looking at mechanically trading those tomorrow on a resumption of today's momentum. You have a ton of overreaction and channelings, not surprising given the sell-off that we've had. So all of those are not surprising. I'd be looking hard at the auto framer candidates. And again, clean energy and tech as a follow through. Tech to me is the interesting one here because you have it on an overreaction still. It's a 551W and it's 3.8-1. So there's still more room for that to go. Treasuries gave a little recovery today too. So if tomorrow reverts back to weakness, so if today's rebound was a trap, the fact that treasuries were up today strengthens the case for them as a defensive measure. Again, the summary of the auto framer. Here's everything that is better than 2-1. And here is their mechanical framing data. If you want to practice setting up mechanical entries. I like Treasuries, Home Depot, and Microsoft, and I would add real estate and tech into that mix. All of those have a compelling reason on a swing trade of why they could be good. and they're all 3.8 or better to 1. Nike, to me, there's something really structurally wrong with that. And so I would not even be thinking of that as a swing trade. There may be an intraday opportunity if you're a Nike trader, but I would stay with these other ones myself. I like the Russell and the S&P for our futures traders in there, and the leveraged ETFs, and diamonds and mid caps are still in there. So the whole U.S. is kind of in this auto framer mode, and then the afternoon recovery gives a hint of what may be available for tomorrow. Surprisingly, the S&P was less volatile than some of these other symbols, and it's not at 2 or better on the squeeze, but it actually was reasonable compared to other symbols. And there's tech and the Russell. So there's still, what that means is when they're that high on the list, there's room for big directional moves tomorrow. Not surprising, dominated by the fall in the ETFs, to a lesser extent in the Dow. There's still plenty of Dow stocks that are in the summer. I think Intel's a sleeper in there. That's shown some real strength. And I think there's room and energy still, despite today's fractional losses. The beginning potentially of a turnaround, that would be seen as a bottoming tail. If this thing continues over the next couple of days to recover previous highs, then we would see today as a bottoming tail, by which we mean a larger than normal range with the open and the close in the top of the range. You sell off, collect all the stops, and then rebound as part of day one of a recovery move. And the upper limit target is 480 on that one. On the other hand, would not be surprised to see this thing give back all of today's gains if there's more fear like we saw at the open. That could easily happen. And the trigger on that would be something like 456. If that breaks, then it looks like this downside finding support at 450. And if 450 breaks, then it's a big move down also. S&P is in a critical state. The slope is rolling over. It's right at the long-term historical average. So this is a market that genuinely is poised to break in either direction. This is why that percent stretch we saw was in the red, because it is now getting historically close to the 200-day moving average. As this bull starts winding down, it's flattening and giving back some gains, but the 200 period moving average is still rising. So that gap is narrowing, and so it's bringing it closer and closer to truly a sideways type of a market. So that almost feels like the last gasp of a bull. So this is either going to recover from here like it did the last 3 times. You notice that it moved up strong, had some short bursts. 3 out of the last 3 times it did that, it had some recovery moves. So we would not be surprised if there was still one more short burst up. But at the same time, it can break down pretty easily here, as we showed on the market health check. Stuck right square in the middle of the river, which means it's ready to go in either direction. Breakouts from the river in either direction should be followed, and careful tactical trading while it's in that daily river. All right, that's everything from the daily. Let's go to the charts. Let me know if you found that helpful. All right, he's noticing the Z3 pinch here. This is where he starts trading. And now this, we've already seen one leg down. This breakdown from the previous Z3. So the first leg is in. And so we might say a second leg down would be this, which also coincides with just about that Z3 breakdown. In the future, let's make that red to show you're getting short, and then that would be your cover. And using the PSAR box as his risk, he gets short. There was a second position opportunity there. When those things collapse, they collapse. This is actually, you know, with probably 8R in hand, you gave back 1.3. That would have been a 1, 2, 3 exit there. But because you just have one position on it, you know, you can almost tolerate that heat. This one was an effort to reshort, you know, on a test of the low. That's a good shot. I think after a 1, 2, 3 reversal, I might advise covering that here. And then you did a nice job of the stop and reverse. On this one, I might, maybe I could be quicker on it. You're on the 5-minute charts, right? So the 1, 2 exit on that would be up about here. Still, that's a pretty good exit. And that one covers this one. I just think when you're on the 5-minute chart, you can afford to be a little tighter on your reversals. You won't give back quite so much in both cases. Actually, in all 3 cases. And now the one I want to talk about. Oh. Leg 1 is up, pulls back, finds a higher support, takes off again. When price goes, especially on the 5s, when the price goes through the PSAR, like it crosses the dragon and then recrosses the dragon and makes a higher low, that is K2 all day, every day. There was even an opportunity for a second entry here and a routine exit. Oh, that's another 8R. Given the size of what you're able to pull here, this move is larger than that move. Now, since it's the upside, you notice it takes longer than the downside move, but there was another 8R in there. Caught a 2. And all it did was recover to this support level. And the other thing to notice is that the stretch from the VWAP to the maximum stretch of the RL10 is the same thing to the upside. So there's a certain symmetry in all of this. By the same token, if I go from the 270 down, then when it crosses the 270, I'm entitled to think of a move that could get to here. It got halfway back. But that's the play right there. Winter, spring, and then immediately back into summer. Look at it getting better and healing. Oh, that's the move. With a nice tight stop. Mental state is good. Don't rush. Waiting for the moment. Noticing the critical state, the Z3 pinch. What is naming the pattern that you're trading? When he says this is a CD, then it makes it easier to understand the template of what you're trying to get to. And now you can focus on price. Moving the stop losses to preserve the profits. That's really good practice. He's kind of basically tracking the edge of the skin of the dragon. Although I'd like to have taken that exit there instead of here. But still, that's good, very good management. So print that and laminate it and keep it as your iconic inspiration. That's good work. Trust the PSAR. A low. Tradable. Wrist box crosses the VWAP, tradable. This is a good stop and reverse. Fantastic cover. Not sure. That's the cost of disbelief. Missing the easy run. And then that's a good kata too, and a good recovery. That costs 3R in here. Good scratch. Not a bad one. I would say don't let that a Z2 excursion, don't let that lose money. And now you got the same pinch, PSAR flip. There's your entry. This was 4.6. Could have been 10. But that's getting paid. And there's more gold in the mine. So Tom and Joe are using one of the trading creativity exercises I posted last week about. So Joe produced a set of rules to clarify the system that he's working, and then he gives that to Tom, and then Tom tries to trade that, just following Joe's rules. He's not worried about being right or wrong. He is focusing on executing the trade rules to a standard. And this helps two different people. It helps Joe be very clear about what his rules are. If his rules are not clear, then Tom will have a hard time trading them with precision. Tom is freed of the ego trap of trying to come up with his own rules. All he has to do is perfectly execute Joe's rules. And then if he trades it with no error, then we can say, oh, the rules were understood. And that will help Joe clarify what it is that he wants. Now, they're using a $2 hybrid frog box. So this was a breakdown, and then it gets short as it crosses the VWAP, and nice exit. Now he plays so he's using now a $3 frog box. I want you to notice that when you get long here on the PSAR flip, the belly of the dragon of the box would be the wrist box. If you're using the bottom of the RL10, it would be this. If you're using the full frog box, this only gets half the value because the size of the wrist box is twice. So nice entry. I want to see you get out here at the PSAR and not at the Bollinger Band mean. Now we got the low, higher low. That's the same one we saw in XLK, but now this is the Kata 2. Here was an opportunity for a second position when it makes that higher low above the Bollinger Band mean. Perfect exit with the PSAR. Trust it. this was a point of clarification to Joe. If he wants to be able to go short, would that have been a high, a lower high, and then break through the collapsing dragon? Yeah, and that probably would have scratched. And then here's the next kata 2 with the PSAR flip. So Joe's rule set, as Tom understands them and trades them, is 3.13. So they will continue to clarify back and forth the rules and any modifications that come out of that. And then I'm going to ask them to summarize what their learning experience was. That's part of the creativity course for traders that they're taking, is to see what was the collaborative learning by trading each other's rules and seeing your rules being traded by someone else. What does that do to reveal or deepen your understanding of your own rules? Big gap down. Here was that short trade that we've just seen in all of the other ones. Here is the cup and handle. There is your SSC. Fails to make a new low. PSAR flips, crossing the Bollinger Band mean, turns into the summer. So instead of going short here, this would have been the exit of this trade. Now you could go short here because you saw how painful that was, and that was, I don't mind that effort going short at all. I'd like to see, that's a 1 hour risk. I don't mind taking it right here. This should be in here at the PSAR break. If you're following the same logic, that's where this should be getting short. Then you have a chance to make bank in here, or at least this is where the exit should be taken. If you're just reading that chart, a low, a higher low, it had 20 bars to fail and didn't. And now it crosses the Bollinger Band mean, turns to summer. Either one of those is a better exit for that short and a stop and reverse, in which case, oh man, we got it. That's the trade. And there's a kata 2. Not willing to go long today. Weakest stock and weakest sector that's healing. The entire market was up. Tech was leading the way, and the FANGs were better than the Qs. And Facebook is one of the key elements of the FANGs. That's one of those uber large caps that can absorb a lot of institutional money that wants to get long in a hurry. Be willing. Intraday only. From extreme conditions come extreme results. Gap down. We should be getting short somewhere in here. A low, a higher low. Now, I like this one as a short because you're betting on this rollover, and that if it breaches below here, this thing's going to get crushed. But it doesn't. When it comes back and hits the PSAR, take that exit and stop and reverse, or make that the stop and reverse. You might just scratch in here, but you're hitting the chance. This is a little late getting in. Here's your PSAR. Here's where it crosses the Bollinger Band mean, but you're getting at the VWAP. That's fine. Now, if you get that much in your favor, and the PSAR or the PSAR flips, take a scratch. Don't be doctrinaire. This is where your stop and reverse should be. Every day is a new day. Every day, am I catching fish or are the crocodiles eating me? And each day is a new day. That's fine. Just follow the price. Trade what you see, not what you believe. This is correct. PSAR exit. And again, we're late. It was almost an R in our favor. Oh yeah, okay, notice that. Yeah. So an R in our favor, we let it have a 2R move against us. We should be scratching here and stopping and reversing either there or here. I love this exit and I love the re-entry. This, I think, you were a little gun shy because of maybe some profits that you gave back. So you were quick to get paid. I don't mind getting quick to get paid. So I like that you got realigned with price by the end of the day. So we got to get more out of this, maybe out of that. I like that this one, you gave it a chance, but then didn't lose money on it. That's the one I like. So we need to work here on shifting our attention. Still in good shape, getting paid to learn. Suck it up. I don't mind the scratch. I think we might get in a little quicker here, especially with the gap. Once this collapses again, though, we got to be short in here. You're on the threes. That was a 5 minute, 5 minutes after this got scratched, it collapsed again. So we want to be here instead of all the way down here. Then that would get paid. I like this effort to get short again and then waiting too long for belief. And now this, feeling a little gun shy. This is where the collapsing dragon and the PSAR is. Now this would get paid to here. And then that becomes your Kata 2. I like the idea of being short, but I think you want to get that on the PSAR flip. That's still pretty good. Got paid. And now, okay, out to lunch. Pinch mode middle of the day. That's also failure to fail further. And now notice you have winter, spring, summer, breakout. Here's a Z3 breakout. Good scratches. Although again, the problem with this one is how tight your wrist box is. But those are good fractionals. Lunch. Here's the Aussie on the threes. Double bottom, RLXD, got up to Z2 and pulled back. At least you scratched, but I'd like to make just a taste. Maybe a little slow on the re-entry as this thing starts rolling up, but that's kind of quibbling. But this, you gave back too much here. There's a 1, 2, 3 exit at the skin of the dragon. That could have been a 1.6 instead of 0.8. I like the re-entry. I like the exit and the stop and reverse, but then we got to not give back so much. I like getting paid. You're giving back too much. You gave back half, and then you're letting your wins diminish, but you're holding on for the full loss. The dragon is your friend. When these things work, like back to the VWAP, it should never get back through the dragon. And that whole dragon is rolling over. Yes. You notice that's the more correct entry. This is still pretty good. That's a pretty good, at least we got paid this time. Now I think you're in a hurry to catch the next moves. If you're going to do that second one so fast, then get out here and make that a scratch so you get paid more. And now we got short here. We had all of this and gave most of it back. And yet you're holding on for the full loss. I think this was this happened so fast that that's a good scratch. This is about energy and resilience and keeping your energy level so you can keep taking the next shot. Remember, I mean, you're on the 5, you're on the 3s. You got time to reset emotionally, but that's a good kata 2. And now you crushed it. Excellent. There's your stop and reverse, as you note. This was probably emotional energy was not there. I don't think this is too often. I just think you're getting, you're questioning your wins and holding on and hoping, but you're not getting out with the same aggressiveness on the short side or on the losing trades, right? So still, you got paid 7.4 to learn today. I keep that up. You're getting good resilience and you're building up calluses in your hands right now. This is good. Yeah, this breaks my heart here. That's the kata 2 stop and, or that's the kata 2 stop and reverse. And there's your second position. And there's a Z3 pinch. That could even be a third position and a standard sniper exit and then a kata 2 re-entry. Oh, that breaks my heart. And now big gap down with that much of a minimum manageable risk box. There's your short. This rolling over, that's a collapsing dragon. That's great. I like that you didn't even take a full 1R loss, but I'm wondering where's my stop and reverse? That is a pure SSC right there. Notice it, winter, briefly, spring. Even if you waited for the summer and then took a 1, 2, 3 exit, that makes today a winning proposition. And then this, oh man. So NVIDIA is a trader. Stay with it. Pinch. So there's the pinch box. Size of the wrist box is appropriate. Good short. It came down to Z3 in reverse, so he takes the 1, 2, 3. Perfect. And then when that rolls over, the baby dragon gets short here instead of here. And now this little gain that you have, you gave back that much. Similarly, when this thing rolls over and breaks through, you can be short here rather than here. Then this pays back a little bit. That one's, I'd like to see that scratch instead of that's what I'm talking about. Bang. Second one, after the Z3 breakdown, that's good. And then tight, strict control 4. Yes, sir. Good effort. This is a little gun shy. We want this in right about here with that wrist box. Then that's excellent. This would have been tempting on this side. Probably not much there. You probably would have, scratched this, and then it's already late in the day. So almost 5. That's good work. That's on the 3s. Nice work. So here's TZA. This is the inverse triple tech. Here's daily, 65 and 10. So notice the fractal nature. Only this is like one time frame lower. This is on the 10s. Z3 pinch, tight box. Gave back maybe more than we needed to. I'd like to see this up in here rather than here, but still 2R. This reversed pretty quickly, so he draws his wrist box, gets the breakout across. Bing. Or no, I'm sorry, that was a stop and reverse. Scratch, or no, these two negate. Here's a good one. You were quick to get the second position on. Still. And he's taken advantage of the fact of that nice big gap move. I don't want to be long TZA tomorrow unless it's very clear that everything's collapsing with tech leading the way down. TZA is your triple inverse. So be careful on that one. TNA, the trade. So it's not unusual when you're doing that pair trade that when the other one's working big, this one nets out to 0. So those are good scratches, good efforts that didn't follow through. You got paid on that big move on TZA on the pair of this trade. So nice work. All right, good work today, guys. There's some work to do on emotional resilience, minimizing that wrist box, respecting the dragon, staying open to price to determine your direction. Remember, even the weakest stock in the weakest sector, that's an easy short, but that's not the only place it goes. When those things have been pushed as far as they can go and there's nobody left to sell, that is the end point of fear. And now you may have a quality symbol like NVIDIA on sale. So really good work today. The rewards are outsizing the losses. So here's what I want you to notice. Every single one of the losses today was 1R or less. And we had multiple iterations in multiple symbols, multiple time frames of larger than 1R wins. So you're tilting the histogram in your favor, being strict on risk control, being open to those gains a little more, and we're in good shape here. Well done. We'll get this published and processed and get this posted. Today was a good day in our family. My wife's birthday. Both of my girls started their big girl jobs today with KU Med Center, and they did their in-processing online, and they're coming off my payroll, and they're on KU Med, and that's a pretty good feeling. So we shall see you on down the road. Keep working hard. Focus on those patterns. I thought this weekend's discussions of the 3 patterns, the SSC, Kata 2, and Collapsing Dragon, were well done. And that would be worth your attention as a rehearsal. Okay. All right, guys, that's all I got for you. Take good care.